the state of Tennessee, and then it became 4 people, and then it became 10 people, and it went to the section, and then went down to the township and section and range, right? And all of these things began to get broken down and recorded, and then recorded. But it's all in one place. So if the county courthouse burns down 100 years ago, you've lost all your title records, right? And so when you think about the blockchain technology, if you've got 50 investors in a deal, and you take the PPM, you take the offering memorandum, you take the spreadsheet, you take all of the stuff, and you lock it into a smart contract, like with Avalanche or with Cardano, Polkadot's another really great one, and you lock that up in a smart contract, and then you put that out on chain, that is now a forever record. And it's going to say that everybody that was in this deal has this many slices and this many slices and this many slices. Well, that's just a novelty at this point, because all you did was create a digital title record. But here's where it gets really cool. And here's one of the other things that I've seen as a problem that we as syndicators or general partners have in our deals. Now, Noel, you and I talked the other day, and we talked about the fact that you guys are also kind of new to the syndication world, like I'm kind of new to the syndication world. And I've heard this before. What was your last exit? What? What do you mean exit? This is my first deal. How can I have an exit if this is my first deal? Well, how do I know what kind of returns you're going to get? Oh, well, you can talk to my business partners over here. Yeah, but that wasn't a syndication. Oh, okay. So we have those kinds of issues, right? Or you have the one about, well, you know, that's all really great, but I don't really want to lock up my money for 5 years on this deal. I really, you know, Sally's going to college in 2 years and I kind of need my money back. Oh, that's a bummer. You're not going to be able to participate in this because our time horizons don't match. But when you look at blockchain technology, or there's the other one. I know I just invested in this deal, but my wife just let me know we're getting something really expensive. We're getting a divorce and I need my money back, right? Well, I can't do that. I just spent it. You know, what do I do here? But when you have it in blockchain, when you have it in a distributed ledger that everybody can see, and you have a contract that says IGP will do A, B, C, and D for LPs, then you've created something that lives in and of itself. Now, the SEC says that you cannot trade a syndication, which a syndication is viewed by the SEC as a security. You cannot trade a security of real estate type in a 506B or a 506C or even a CF or Reg A plus you can, but in a CF, you can't trade that for 366 days to make sure that we're not running into the AML and money laundering laws. So the reality is, but after that, you could trade the securities. That's what the New York Stock Exchange is. That's what the NASDAQ is. That's a trading of a security or a stock. So once we've done that and we've created the immutable ledger that says, hey, I'm involved and you're involved and James is involved and we're all here. And now when life changes or when things happen, we have created a marketplace where those tokens are tradable or sellable. And really, they're digital securities, but we call them tokens because what else do you really, how do you relate that? I mean, that's sounds so far-fetched, but then again, is it really? Because when was the last time you bought a stock and actually looked for the stock certificate in the mail, right? You held a security that was digitally imposed somewhere. I want to take you back and I want you to think about this. You have a digital record also of this little funny thing you call a bank account, but that's not a distributed immutable ledger. There's only 2 people on the planet that know about that. That's you and the bank. And if something happens and the bank gets cyber hacked, that means that only one of you knows about it because you don't know your bank balance today. You don't know exactly what you had in there. You'd have to log in online to look at it. But if you had a distributed ledger or a blockchain bank, which there are several of now, you would know exactly. In fact, the world would know exactly what was in that account because of how it's recorded in chain and title. And so when we began to apply this to the world of real estate, we really saw where we would be able to very, very quickly create something that would give a flexibility, bring a liquidity to a before mentioned asset that was very, very illiquid, right? I mean, think about this. How many people have equity in their home, but don't want to go pay $10,000 to do a refinance to get it out? How many people would love it if somebody or other people would loan them money against their house and they could pledge the equity in their house to people and could figure out a way to give them a security in that house? That is the world of blockchain, because you literally take your house and you have 75% loan to value. So you're creating 25% digital security that you're then able to find a marketplace for. And there are a lot of applications, they're called dApps, that are coming on in that space that are allowing people to go to a secondary market, because people are tired of, is Apple going to keep going up? Is my money in Tesla secure? Am I going to have a return coming from my American Airlines stock, right? I need something that I know is a real asset. I need something that's not staying alive because of bank or because of government bailouts. So by combining that, we've now put that together, and you're looking at the different buzzwords inside the blockchain world of definance, right? Of CeFi, where banks are getting involved and taking digital securities as that pledge. And then you're talking about being able to convey title through digital securities in real estate, in airplanes. There's applications where people are doing that with cars. There's a company called Carnomaly, and they are doing lending and buying and selling of cars because they've created a tokenized version of that car and have made that tradable. And so when you really look at the side-by-side world of blockchain and regular title, they're very similar. But when you look at how blockchain creates a record that title insurance doesn't, you're looking at all of the reasons why DeFi is called decentralized finance, right? I just got a loan. I got a $17 million loan on a development that was on a $4 million piece of land that I'd owned for 3 years. I had to buy title insurance for $34,000 to ensure the bank wasn't going to get screwed by the previous owner. That was me. So I had to pay $33,000 for title insurance to prove to the bank that I wasn't going to screw and thereby default on my loan, right? This is the world we live in. It's built on fees, right? The last time you got a loan, if you got something of any size, you probably paid 2-point loan origination fee for a 5% loan on a commercial deal. But when you look at the duration of that loan and the fees that you paid and the appraisal and the constant, the annual review of the books and all the things that you probably paid close to 8.5%, 9% for the money. So if you're looking at decentralized finance, you can offer that to people in small chunks because you've digitally securitized that and taken a $4 million building and made 8 million tokens that you sold for 50 cents a piece. And so I come in and I got my $100 and I go, I'll take 200 of those. And you did that enough times because I'm getting 0.00 screw you at the bank, right? Now I can come in and I can put it in a real world asset. I can put it into one of your deals. I can be in a pool of first position money on the asset that allows for me to be the note holder along with other people and get a return that is not available to me without taking risks like investing in the stock market. So those are some of the things when you stop to think about what it does, it really makes it so that normal people can do extraordinary things and be involved in things. See, we're getting ready on the, I think it's the 19th. I had it wrong the other day. I told somebody that it was the 16th and they go, oh, you're doing this on Sunday? But on the 19th, we are actually, no, it's, let's see, the 18th. On the 18th, we're actually going to tokenize an asset live. So we're actually going to walk through the process and we're going to tokenize a $6 million office building that we just purchased, right? And when you think about that, we've raised the money, we have the capital, right? We have everything in place, and now we're going to fractionalize that ownership just like we would with a GPLP, but we're going to create digital securities that will then go in your hard or soft wallet, your hot or cold wallet, and you will be able to carry with you anywhere in the world. And after 366 days, we'll be able to trade with anyone else in the world. If they're interested in buying real estate, they're now able to hold that. You're able to do a completely title company devoid transaction where they know that the last time that had title work done on it is in that smart contract, and nothing has stuck to it since, right? So now you can trade that with a guy out of Chile, right? Somebody from Uruguay, right? We'll just stick with South America, Central America, and give you somebody in Costa Rica for another example. And they can buy that from you, pay you for that, so that now that title has transferred and the blockchain records that James sold to Noel. And we have this transaction, and my cap table manager now lets my accountant know, and y'all will get your K1s accordingly. Because one of the things that's been the huge problem for everybody involved in syndications and transfers midstream is just the paperwork. I mean, really, if we're going to sell something, then we've got to have a legal document, and we've got to have an amendment, and then we got to have everybody in the LP needs to know, but not if it's already distributed, and we all know that, right? So this would, and when you're looking at the question there about capital gains, of course there's capital gain. Well, it depends. We're hoping you made money, right? It could be a capital loss, but the reality is you did sell something, you sold a security, and you will be taxed on that depending on how long you had it, whether it was long-term capital gains or short-term capital gains, because remember, capital gains does not just apply to real estate. It applies to investments, right? And so the reality is you could also find yourself in a situation where you have seen appreciation in the deal and you're wanting to do some DeFi, right? Here's something we wind up with all the time, guys. As you know, there's really two kinds of investors. There's the kind of investor that wants the appreciation, right? And there's the kind of investor that wants the long-term cash flow. And they're rarely the same guy, and they never like the deal at the same time, right? I mean, my dad and I are these people, right? I love appreciation. I need to grow my pile. My dad's got a pile. He's got to make a 7% return on his pile. He lives very well. They're looking for motorhome fuel and dog food. That's it. That's all they want, right? But how do you keep those two people happy in the same deal, right? When the day we buy the deal and it's this beat up, gnarly piece of junk, man, and there's termites in the clubhouse, and it looks like Jacques Cousteau was the last guy that swam in the pool, and it's just a dump, man. I am excited because I know what we can do with this place, right? The other side of that, my dad's sitting there going, oh man, there's all this work and there's all this time before I'm going to get any cash flow. So we go in there, Noel and I, we jump in there, man, we get to scrubbing, we get to cleaning, and this place is now looking great. We took it from a $10 million asset. We've now got all of the things figured out. We've got everything sideswiped, and it's all looking good. The rents are up. And now this $10 million asset's worth $12 million, $14 million. And we're gonna slide off into the sunset. We're gonna make 7 sexy %. My money already did what my money did. I went from 10 to 12 million. I want out, right? But this allows me to, because then I find somebody like my dad and I say, hey, that none of that work you didn't want to do, I'll sell you this, and it gives you 7% day after day after day. And Noel is now convinced he never wants to sell this thing because he doesn't have to, because as the value continues to go up, Noel can get DeFi on that equity that they created, right? And that prevents the need as syndicators. We got to sell something to make some money. We got to refinance it to make some money. because that's how we get paid. But if we're tokenized properly, this asset goes on in perpetuity. Because now the 7%, we got a 3% rent bump. So now we're at 10, 3% rent bump, 10. Now we're here at 17%. Now we get some more DeFi. We get some cash out, lower back down to a 7% return, and we keep going. And we keep going. So this actual asset, instead of having to sell it, can go on in perpetuity because everybody can get on and off as they choose through the blockchain technology because they have the power of the transaction in their hands. So that's the thing that I see is so exciting about what's going on. And that's where there is the ability to have that opportunity, right? So the next question that Michael asked is, but won't there be any transfer fees by state? But you're not transferring real estate. You're transferring a digital security, and there's not a transfer fee and transfer of stock. Because the SEC views it as a security, and so does the IRS, once it's tokenized, you're really tokenizing and fractionalizing your interest in the LLC that has an underlying issue in the asset. So no, the answer is you don't have that. So the reality is there are a lot of ways that you can do that, right? And so we can provide you with examples after examples, but the reality is the world is shifting that way, and it's doing it very, very rapidly because people want solutions that don't involve Main Street or Wall Street. They don't involve us going and groveling and trying to get the loan and worried about whether or not the rents are rising and the rates are rising and all this other stuff, because people need real world solutions because inflation is eating their lunch, right? I mean, if you had any money in the bank today that you've had there for a year, you've lost about 12% of that value. I know they say that inflation is only 6%, but nobody believes that. If gas can double in a year, inflation is not 6%, right? If housing prices shoot up 39%, inflation is not 6%. So you've lost that because it hasn't made anything. And so that way it allows you to have access to different on-ramps and off-ramps. So I know that that's kind of a rambling dialogue of what we're doing, but in that space, we created the ability to, through AI and digital securities, we've made it very easy for syndicators to not really care what their LPs do because it's all tracked on blockchain, and a cap table manager manages the whole thing and keeps everybody straight and out too. So,
Shannon, I want to ask you a question though. Can you do this deal when you buy it? Like, will Fannie Mae and Freddie Mac accept that, or is that something you do after the deal's closed?
Sure. So typically what we've looked at is when you look at how your loan docs are set up, right? So your loan docs talk about not having any one person be more than X%, right? So you make sure that wrapped inside your smart contract is this provision, right? The other thing that we do is we set up two tokens. We've got the debt coin or token, and we've got the equity coin, right? So let's say we're doing a deal and we got it's a $10 million deal and we're bringing 30% loan to value. So we got $3 million in equity, right? We'll create 10 million tokens, 10 million shares for that. And you're wondering why 10 million? Well, because as the asset continues to appreciate and we want to give those gains to the syndicator, the LPs need to get their tokens as well. You're actually gifting out additional shares to level it out so that you're able to keep that balanced, right? And you create debt tokens for 7 million so that as you come out and you've now paid down that loan, right? So you'd probably create 21 million debt tokens as well, right? So now you've paid down on that original 7 million, you've paid it down to 5 million, right? Now you want to go out and the asset now at a 70% LTV would allow for $10 million in debt. So now you're going to release 5 million tokens for debt to a DeFi pool that would come in kind of as a pref, right? So now you're creating your own capital stack without going back to Wall Street and saddling up for 2% loan origination fee right in the kisser, right? And that's the beauty of it. So you're able to create that capital stack as you wish, right? So those are some of the beautiful things about that. So we look at having conversations with banks early on, because banks are aware of what's going on, right? But we're also in the process, and we will have no later than, my hope is by June, we will have our own DeFi pool that will allow us to become that DeFi lender, or allow people to select who they want to be a DeFi lender for, right? We've watched things like Kickstarter or GoFundMe or all these things kind of come in out of nowhere and generate thousands, if not hundreds of thousands of dollars in wealth for people, or loans for people, or opportunities for people, based on a great idea and an opportunity to deploy that. So our platform is really nothing more than a marketing tool of how to implement and use blockchain technology as it applies to real estate, allowing you to come up with your scenario of how you'd like to deploy that capital of others, and how you'd like to give them that security that the whole world knows that they are involved in an office building in Cincinnati. Michael, because it's a marketplace, if all of the LPs wanted to sell at the same time and wanted to come up with whatever price they wanted to come up with, that's free market. They could do that. So there's nothing that would ever prevent them from selling their shares all at once. So, but when they sold, they have to find somebody else to sell to. They're not selling to me. I'm not buying them back. So they're finding somebody else that wants to buy. So the market will dictate whether or not they're all selling today, tomorrow, or ever, right? So that's the beauty of it. You're creating that marketplace. And with the proper marketing, you're looking at the guy like Noel who goes, man, I got to appreciate something. Well, Noel, your wife said she likes the appreciation sent her way. So, no, but you can have that appreciation guy in there selling out to the cash flow guy, right? You can have the cash flow guys looking all over going, man, I don't like ground up new construction, but my goodness, wouldn't I love to own something that was brand new, built last year, that I know I'm not going to have repairs on for 10 years, right? But I'm going to pay a premium for that, but I'm okay with that, right? So one of the other things that we are finding is that, you guys remember this funny little thing that used to be in the Wall Street Journal in a real newspaper when we used to have those, called a P&E ratio, right? I used to look at that. And I used to look at that because that P&E ratio told me how close to cash value that was actually going to be trading at. So when I was looking to buy something, I could see how many times over earnings that was trading at. We're actually looking at a side chain that takes all of the data from the project. Let's say it's a 100-unit apartment complex that James bought. And James is now in the process of implementing his business plan. He's got 50 of the units flipped. He said in his business plan he was going to spend $15,000 a unit. So 15,000 times 100 units, he had $1.5 million to spend. He's halfway through. He said he was going to get $50 more in rents. The funny thing is, James has spent $900,000 of the money. When did the LPs going to figure this out? When were they going to know, right? Oh, but the good news is James is getting $100 a door for that. So maybe there's something there, right? Well, what we've teamed up with is another group that has created a side chain that takes that AI and they take your original underwriting, they take your business plan, and they chew that up every single month with all the data that's coming in from your property management company and everybody else, and they aggregate that and they make it a nice little third-party package. And that package goes out to FFL or goes out to CBRE for a third-party appraisal that allows people to track what your progress is. So now they know halfway through you've had some challenges. Lumber products went up. Supply chain issues have caused you problems. You've spent 30% more. The good news is your rents are 50% more. And by the way, we should have been on track to have a $12 million value. We've got a $13 million value. So while I might need to find a little bit of short-term money to finish. Once we get there, the appraisal will more than cover where we're at. All of these things are happening, and now James is getting a third-party appraisal report on a quarterly basis so that he can prove his product to his investor. What a great way to take trust out of the equation and put it on blockchain so it's everybody knows what's going on, right? So that's kind of should answer a little bit, James, about your question about what sets the price, but then it also supply and demand, right? If the CBRE token says that it's a cap 5 and you know that it's a 4 cap market out there, boys and girls, you can set your price at where you want to sell your token, right? So if you go into any of the exchanges, Coinbase, crypto.com, there's a bid and ask, just like the stock market. You're going to put it out there, James, and you're going to put good till sold, and you're going to say, I want $100 for this bad boy. Noel's going to come on and he's going to go good till filled. I'm going to go 90. And y'all are going to sit there and you're going to come and because you know you're going to look at it at the end of the day. And you go, all right, I'll take 95. And Noel's going to go, all right, I'll go 94. And then the end of tomorrow, y'all are going to come back together and you're going to make a deal, right? But it's going to create that liquidity in that marketplace. We've hooked up with several IRA companies that are digitally secured IRAs that are looking at like Alta IRA that are their clientele. They've got about 23,000 IRA clients that are looking at our products, right? We're creating that marketplace that markets that out to others, that puts all the deals in the spotlight. So if you were to go to myverticalequity.com, you'd be able to look at an offer wall of all the different deals that are being offered currently that you might want to invest in and that we're getting ready to tokenize. So by creating that marketplace, James, you want to spend $1,000 advertising your deal, and Noel wants to spend $1,000 advertising his deal, and I want to spend $1,000 doing mine. We're going to get nominal results. But if I spend $3,000 advertising all three of our deals, I'll get 4 times, 5 times, maybe even 6 times the advertising dollar value, which is exactly what the platform builds out, right? So now we're looking at not only being a platform for investors to come and look for deals, but syndicators to come and look for capital, right? On top of the ease of use, because it allows those different on-ramps and off-ramps. Make sense?
Another question I have for you, though, how does that work if you're doing like a 506B, though, and you're only bringing in non-accredited investors?
That's an excellent question. The beautiful thing about our platform is if when you come on my platform, you can look at 506B deals. You can look at non-accredited deals. So then you go, hey, man, I've looked at this deal. I was not advertised to me. I came on looking at James's deal. I happened to, out of the corner of my eye, I saw Noel's deal. So now I want to go get to know Noel, right? But it does not allow me to see the 506C, and we're building in a genealogy that says, hey, you came through James's little link there. You can only look at James's deals, right? You came through Noel's link. You can only look at Noel's deals, right? Now you can say, hey, James, did you find what you're looking for? Nah, not really. Would you like to meet some of our other syndicators? I would love to. Well, I got a list of guys over here that would love to meet you too. What are you looking for, right? So then you can begin to have these kind of arrangements right here. This is a great meet and greet for people who want to get to know other syndicators, become investors in other people's deals, to get to know each other, create that substantive relationship that happens, and then start talking real estate after that, right? So it's an interesting foray into what's next, right? One of the things that we're looking at doing is a serial Reg A Plus, right? Where we can start a Reg A Plus, and then through an amendment, we can add assets to it, even from different syndicators, because the Reg A Plus is for the platform. So we're able to raise large sums of money from non-accredited investors through a Reg A Plus and advertise, because we as the platform have gone through that process with the SEC and become approved, right? There's 2 ways to do that. The 506Bs and the 506Cs put the weight on the investor to do their research because they're the way that they're set up. But when you get into the non-accredited and the advertising, the SEC says, hold on, we want to make sure that we review the syndicator. We want to make sure we review the platform. We want to make sure that we look at who's doing the offerings so that we can make sure that everybody has the right credentials and is not a bad, shady guy. So that if the investor comes in and they just saw this ad and they invest grandma's last dollar, they're going to be as safe as possible, right? So there's all these things that are all SEC compliant. Even though we're stepping into the blockchain world, we're continuing to make sure that it acts like a dog, walks like a dog, must be a dog, so that when the SEC comes and looks at it and says, yes, you guys are operating like it is a security, and you're doing the KYC, you're doing the AML, you're making sure that everybody in this ecosystem knows what's going on. So let's see that. Well, that's a long one.
Yeah, while Shannon's reading that, I just want to let everyone know, if you have a question, feel free to speak up or put it in the post.
Sure, hackers are brilliant. You're right. I mean, hackers are brilliant, but the reality is, where's the theft going to happen if you're stealing a first position or a second position or an equity position in real estate? I mean, it's not something that's going to be easily spendable. So it's, yes, you're always going to have somebody hack something, but they're not going to come hacking real estate positions, in my opinion. They're going to be looking at Bitcoin or, Ethereum or something like that, that would be something that they could move quickly, that they could use, that they could spend. This isn't really going to be something that is going to be spendable in that regard, that you could then, you can't take your office building in Cincinnati tokens, put that on your MasterCard and spend it at the grocery store like you can with Bitcoin or Ethereum. Currently, MasterCard and Visa have protocols that allow you to actually do that, where you're spending your money and it's converting it right then and there. Crypto.com does that with their credit cards, as well as provides an interest rate that's phenomenal. So I hear what you're saying, and you're right. And if I was brilliant enough to know the answer to that, I certainly wouldn't be in construction. So but I do see that where you're dealing with a security of real estate, it makes that really kind of not a hot commodity for hackers. One of the other things I wanted to kind of circle back on real quick is, let's say that you're in the position now that you're doing your distributions, you've gotten through your upside, and now you're doing your distributions. Blockchain technology makes distributions an absolute breeze, because when you take that and you've got your money and you put it into the hopper, it's kind of like a Plinko machine, where it follows the chain down to whoever has it last. So when you go with your distributions, you're distributing the money over 10 million tokens, and it goes and it gives Noel his tokens because it sees how many he has, and it does the math and it says, here's yours, here's yours, here's yours. So the fact that Noel sold his tokens to James doesn't bother me as a syndicator. I don't care, because I sent it down chain and it went down and it followed it, because it is a legal chain of title, one to the next, to the next, to the next, and it's replicatable. That money will find its end and it will go into the wallet that owns it at the time. That's another beautiful thing about it, right? So, is there a limit on how many equity tokens per deal each LP can buy? If you're in a CF, there are. If you're in a Reg A plus or a B or a C, there's not really. Some documents, I have documents like this that I won't sell more than a certain percentage of my LP to one LP, right? I won't go more than 20%, just because the bank is going to say that if you ever sold more than 20%, you've got to notify us. So I won't let any single buyer, any single LP be more than that. I don't ever want to notify the bank, right? So the answer to the question is, that's up to the syndicator, but usually not. So.
Shannon, I'm confused about the what you said about the hackers not being interested in that equity because it's in real estate, or the tokens. not sure, I mean, not sure that the value of that equitable stake in that token is any different than to them than any other valuation on any other commodity or any other, commodity that the tokens are representing.
Sure. Well, let me put it to you this way, okay? If you're looking at Bitcoin, you've got 21 billion coins, right?
Yep.
You've got a fairly liquid market, right? You can disappear in 21 billion coins. I've got a real estate deal, and my real estate deal created its own token. So it's going to be the Shannon deal, okay? And I'm going to create 10 million of the Shannon deal coins, okay? And I'm going to lock up half of those coins because I don't need them right now for my equity. And I've got 5 million Shannon deal tokens sent out. And we're all in this deal. And let's just say that I have nobody in my deal bigger than $10,000. So I have 5,000 people in my deal, right? Then all of a sudden something happens and I got one dude in my deal with all my tokens trying to sell them. Be pretty easy to spot the weasel, wouldn't it? Not saying that you couldn't. You hacked it, you're hacking into something that, sorry, 21 million. You're hacking into something that is very, very different and isn't movable. It's not something you can go create a trading pair of Shannon tokens, because if you understand, there's a difference between coins and tokens, okay? A coin is blockchain. It is a specific code of chain. It is one and of itself. A token is something that's created on that chain. So it's using a dApp to create something on that chain. So it's like taking a 5.3 liter engine and building a race car. I'm building the race car on Ethereum. I'm building a race car with Avalanche, which uses that Ethereum protocol, just does it in a very efficient way that it trades. So now I have a much more identifiable thing that the hacker went and got that will be fairly easy to spot where he went to try to trade it, right? And we can argue about this all the time. I got to tell you, I'm not an expert in cybersecurity, right? I have no business whatsoever talking about what hackers can and can't do, right? I have a hard time remembering my own password, right? So I'm really not that guy. But what I do know is that we are creating things that are unique enough that you would be able to spot it being hacked and watch it. It would be with a bit of difficulty that they would move that. So I believe that a hacker would spend his time doing something else, because on top of the coin, wrapped in that coin is a contract that states what can and can't happen. So
that makes sense. Thank you.
Yeah. So sorry. I mean, I wish I had a better answer. I wish I'd say, oh no, we've got this. We've got the Coin Maker 9000, and there's no way you can hack. I just don't. I don't know. So anyway, so that's what I know. That's what we're doing. Like I said, on the 18th of January, we are going to, in fact, James, if you don't mind, I'm going to put the link to that in the chat so people could go to that, see where that meeting's at if they wanted to. Is that okay with you guys?
Yeah, sure. Go ahead.
Okay. So this is the Zoom link right here. And if I were really super smart, the other one is you could go to my, see, Castleman, you got a guy that has to talk while he types. I mean, I'm really not the guy to talk about hackers, right? myverticalequity.com. You can see our offering wall. You can have to fill out your KYC AML to get in. but it's a great visual of what it is we're doing and how we're doing it. And so this is, let me see, can I? The other one is if you go to info at, you can hit us at info@shannonrobnett.com and you can ask for the invite and we'll send that to you. But it's going to be January 18th at, what is that, 11 a.m. Mountain Standard Time is when we're doing sorry about that, Jared. I was talking and typing this. I know, don't you? I get it. That's why I drink coffee a little bit, right? But
Shannon, also,
anyway.
I'll kind of real quick. You're able to post as well in the Wealth Tank Mastermind Facebook group. So
Okay,
we'll put that up there for everybody who's on there. If you're not already a member of that group, be sure you get in there. And this is, that's really the community where we'll continue conversations from these meetings. And people have additional questions, they can put them in there. Shannon, they can tag you, and that's really what it's all about, is keeping the conversations and sharing the value, even when we're not holding the live meetings.
Correct. No, I totally agree with you there. And that's the funny thing is, I mean, if you guys would have told us that we'd be doing this 5 years ago, we'd have been like, yeah, okay, future boy. If you'd have told us we'd be doing this 10 years ago, we'd be talking live video streams with multiple people from all over, we wouldn't even have bothered there wouldn't have been much of a comment. There would have just been, us calling the people that put people in straitjackets to get you out of here. Cause yeah. So, but that's the amazing thing with where technology has gone, I mean, through here's the bad thing about COVID. I mean, one of the bad things about COVID. I've been working remotely in Puerto Rico, running a construction and development company 2,300 miles away, and I've done it with Zoom for 3.5 years. And in COVID, everybody figured out I wasn't that smart because everybody was doing Zoom. I used to get on a call and go, hey, let's do a Zoom, 3 years ago. And everybody's like, wow, you're pretty smart for a contractor. Now everybody's like, Zoom. Oh, you're just a regular old genius, aren't you? So anyway.
Yeah, I got a question about, you mentioned earlier that on that one deal that you had the land that you own worth $3 million, and you said that the bank required the title policy of that cost you $34,000. Are you implying that with the blockchain technology, is it as of now, are they allowing that as a substitute because it's on the blockchain?
No, what I'm saying is that was a requirement of the bank.
Right, I understand.
Right.
I didn't know if you were implying that the blockchain would serve as a form of title chain that would allow the bank to forego that expense in the future.
I don't know how banks are going to view it because banks and title companies are together, but I know that if I've got title insurance when I bought the land and then I tokenize it and I put it on blockchain, that original policy gets locked into that smart contract and travels with that smart contract down the line through all those different sales. So the people coming in on the DeFi protocol, the people coming in as late series LPs, they're all going to be able to see that title policy and know that at the time of their transaction, they're not going to need to get additional title insurance to ensure that there hasn't been something else recorded against property.
Gotcha, makes sense.
So let's see, Marafi, the one on January 18th, we will actually tokenize live an office building. So if you want to tune in for that, we will actually make it happen. And hopefully it won't work like one of David Copperfield's tricks where the whole thing disappears. That would be problematic. We tokenized it and vaporized it. It was the wrong button, but anyway. So yeah, so I am, I've been allowed into the Wealth Tank Mastermind. So I will also put that link there. We'll get that in there tomorrow so that you guys can have that. And we'd love to see you guys on that call as well. It's 11 o'clock Mountain Standard Time during the day. So, but yeah.
Awesome. No, that's good stuff, Shannon. We appreciate you jumping on here and taking the time to share this information. Really good stuff. You know, we still got some time, so anyone that has any questions, please do. You know, you can either post here, but we encourage you to you know, turn on your video if you're able and ask live. And it's great to get the conversation, the dialogue, and really dig into some of these questions.
So Noel, what time is it where you're at? That's a question I got to.
Oh man, almost 2 a.m. So like you said, the beauty of Zoom, I can be right here in Innsbruck, Austria, and had to get like an hour nap before this, and then I woke up, my alarm didn't go off. Oh my God, I'm running late. So here I am. So
you know, Noel, I don't want to tell you you're retired, but if this is what you're doing at 2 a.m., things have definitely changed in your life.
Yeah, I'd rather be doing this than you know, the army suck. Yeah.
Yeah. So no, I remember when we were younger, 2 a.m. was when the party started, right?
Yeah. No, get kids now, like, you know, 10 o'clock p.m. It's time for bed.
So Daniel, you've asked what platform, and really the way that tokenization works is there are a lot of token makers out there. But as I discussed, the difference between the token and the coin is that the coin is the underlying chain, okay? And currently we're using Tezos, but we're moving over to Avalanche because of the processing fees are a lot less. So the gas fees is what they call them, so the gas fees are less on Avalanche, plus Avalanche also has a community factor. So think about this, Noel. If you used Avalanche, you could build in a community protocol that would give all of your syndicators or all of your LPs the right to vote as to whether or not we raised mezz debt, whether or not we accelerated the payoff, whether or not we did these, whether we bought back some of these other shares, whether we issued more tokens. All of that is part of what Avalanche does. It's kind of like a DAO, which is a decentralized autonomous organization, which has voting rights locked in with a smart contract of governance like an HOA. So it allows you to put that together. So Avalanche is who we're going to start tokenizing with after we do a couple on Tezos. That's the chain, and that's the platform that we work on. Our platform is My Vertical Equity. That is, we'll be creating the marketplace where the coins will trade, where people will be able to find a secondary market for their security. Did I answer that, Daniel? I hope so. So
that's sounded good to me. Yeah.
Devil's in the details. You're absolutely right. There is a devil in the details. But and that's one of the things that I've looked at is putting myself in alignment with those that have been a part of the FINRA conversations. That's the finance conversations, been a part of the SEC conversations. In fact, one of the main people in my corner, their organization employs a former attorney for the SEC. I don't know how you trust a former attorney for the SEC, but what you could trust is the fact that he would know how the SEC would react. And so he has a lot of those rulings. They've done a lot of those dialogues where they've gotten their opinion papers back, where they've said, hey, if we were to do A, B, and C, we're going to do these things, right? So even working through things on how do you prove where the money came from when it comes to the anti-money laundering of how do you send money to buy securities? How do you send that money? How do you verify that it was actually James that sent it, right? So we're actually actively, do you guys remember when you used to link your bank account to your PayPal? You remember that, right? They would send you these two little 2-cent or 3-cent transactions. Then you had to get online. You thought you were so cool with your dial-up. James, come on, don't tell me you don't remember that. And you used to have to put that in. And then they would say, oh, yes, that is you. They verified that it is you. It's your email address. And you're trying to link those accounts. Well, we're doing the same thing. So we're going to send you, you say that's your wallet, James, I'm going to send you this and you're going to send me those 2 deals that say that we are linked. And now I have my wallet for my investment and you have your wallet. Now all I need you to do is show me that you have linked your FDIC bank account to that wallet, like Coinbase or crypto, and then show where that 50,000 was in your bank account and then showed up in your wallet. And now you can send it to me wallet to wallet, right? Now we have, but see, we have to write these papers. We are on the front edge of everything. And this is a peach colored shirt. I don't look good in County Orange, okay? So I want to make sure that I stay on this side of the bars, right? And so we're going through those kinds of things to make sure we don't get into trouble with that. As far as the smart contracts go, Daniel, they're not really smart. I'll just be honest with you. A smart contract is kind of like a marriage contract. No, I'm just kidding. My wife's not there. A smart contract is essentially a sealed box. It's like a time capsule. So I take all of my SEC documents that my attorney wrote, right? And I put them in there and I say that and without that, and then we're going to mint that and crush that and put a piece of that contract in every single token. So you can see that in every single token. So now that is then going to get distributed. So now we are giving everybody a copy of that contract, a copy of the PPM, a copy of the OM, a copy of the underwriting, all of those things that you would normally get are now locked into each one of those tokens and they're all transferable. So everybody has that immutable record and that distributed record. So then you have those. Now I'm going to have taken your USD or UST that you created. You came off of your crypto.com account. You went wallet to wallet with me. We're going to mint those tokens and I'm now going to redistribute back to you the Shannon office building token, right? So, and which we call the SOF, right? Or whatever we want to call it, right? I got to go with acronyms for you, right, Neil? I mean, all that time in the Army, everything has to be an acronym, right? So we would create that token. We would then transfer those tokens back to your wallet. And now you have those and you can take those offline in cold storage. You could leave them in a warm wallet, something like that, right?
Nice,
So,
very nice. All right, awesome. I know usually around an hour we get a few people to drop out, but we're definitely not in a rush or anything like that. So this is all about community and sharing value and networking as well. So what we'll do, we have a small group left here. I want you guys just to go around the room, and if you're able to introduce yourself, tell us where you're from, what your experience is in real estate, and if you have any questions, let's hear them. And let's start with Christy. I got you here at the top left.
you got to turn your mute on.
You're still muted.
Now she left. You made her mad, Noel.
All right, let's see. Maybe she's had some technical issues there. I hope that's the case, right? All right, so Mary F, see if are you available? We'll go to you next. So Christy's able to jump back on.
Hello. Hi.
There you are.
When I was running in and out the kitchen. Sorry.
Okay, no worries.
Introduce ourselves. Is that what you said, right?
Yeah. Go ahead and just a quick introduction of where you're from, what you're doing, what your experience has been, and if you have any questions.
Yes. Mary Brown. I'm in Los Angeles. I'm a new warrior. I'm just listening, learning, and networking with veteran warriors. So that's what I have right now. Thanks.
Yeah, no worries. Appreciate you joining us.
Thank you for having me.
Yeah, absolutely. Cool. All right. So Christy's still muted, gone. We got A. Winfield, we got Michael, we got Wes left here. If you guys you know, jump on here real quick, and I'd love to hear your story, where you're from, and if you have any other questions for Shannon or for James or I.
Mike Sharon here. Thank you, Shannon. My background similar to yours. I've been in real estate since I was a baby. My father was a developer. My mother was a broker. So I kind of followed in the same footpath. So, and you know, I was a real estate appraiser for 15 years. And then in the last 8 years, I've been broker in large multifamilies, strictly in New Hampshire. You know, one of the largest deals we've seen in New Hampshire is $100 million, which is, you know, small change compared to our southern counterpart in Boston, which is just an hour from us. So we're starting to see, starting to be more and more common to see $30-40 million sales. You know, a lot of the primary markets are too frothy, so investors are heading to tertiary markets like New Hampshire, where they can invest and have much higher yields.
Yeah. What are cap rates in New Hampshire right now?
Well, I'm closing on a deal tomorrow, a 96 unit complex that's closing sub fives, which is unheard of historically. I mean, that's a newer complex built in the 80s, a lot of value add. You know, the actual rents are you know, $1,100 a month for a 2-bedroom. Market rate on the you know, the pro forma rents on those as soon as they close is more like $1,450 to $1,500.
Wow.
So that's a big
So
value.
they'll put it back to a 6.5 in 12 months.
Exactly, minimum. Yeah, they'll pick up a few hundred basis points on the. This is actually a unique play because they're going to in July they're going to refinance and make this affordable.
Oh,
So
wow.
the tax credit play is going to be is really going to allow them to pull all their equity out and refinance with tax credits and lock in a 40-year AM. So it should be that was like a last minute. The attorneys came up with that idea, so that was, yeah, we're seeing a lot of interesting stuff. I'm thrilled to learn about this blockchain, because this is really the frontier of where all of these large deals are going to flow. I mean, I'm
Well,
convinced.
yeah, I mean, you know, we're closing next Tuesday on a $64 million deal at a sub 4 cap in Idaho. It's a 2-year-old brand new deal, but we put it under contract 6 months ago before I got to where I'm at with blockchain technology. Otherwise, I would have never sold it. And that's the whole point, is to allow, I mean, we had massive equity in this thing, but the only way to get to it was to either refinance it, right? Or to sell it and, you know, pay everybody out. And that's what we've chosen to do. But you know, the market is getting so spicy. But then the next question is, where do you buy the next one?
So yeah, that's a good segue into. So how does this whole blockchain thing work for 1031s? Are you able to take your tokens and your interest in your tokens and move those into a 1031 somehow? I mean,
Oh, see, the thing about that is it becomes a security where your securitized interest, and it's kind of a funny fine line, but when the IRS looks at GPLP situations, syndications, you're dealing with securities and securities laws, but you're dealing with real estate. When you step into the tokenized world, you deal with securities as you deal with stocks. And so at that point, you lose your 1031 ability, but you also lose the need to sell because you have the DeFi protocol so that if you particularly want to get some DeFi, some decentralized finance on your $100,000, you can go to OpenDAO protocol. You can put your tokens up, collateralize them. They'll loan you 50% loan to value. Now you've got $50,000 of your money back, right? Let's say Neil's just killed it. He's done his job. You're up 40% in 2 years, right? 20% IRR. You got it for 2 years. You've done all that value add. Your 100 grand's now worth 140. You're going back and you're getting 70 through DeFi, which, as you know, a refinance is not a taxable event, right? So if you were to sell your 100, you would pay 30 in taxes. You would wind up with 70. You're in a situation where you still have 70, you still have the asset, and the income off the asset is continuing to pay the DeFi loan, right?
Yeah.
But that's up to you and your choice. And so maybe James doesn't want to do that. Maybe Noel wants to get 30%, right? So it really opens up a whole new world of, do you ever want to sell it?
Right, yeah, so you, on that $64 million sale, you still have the same basis, the same gain, and there's no interesting play here for that deal if it was on the blockchain, no benefits to it.
Well, I mean, you could still, we're doing things with the charitable trust in this sale. We're also doing things with a opportunity zone. So those still work because capital gain still works in those areas.
Yeah, those charitable trusts, I've been reading about them. Those things are fantastic. So you can take out up to 15% a year, or
well, the thing, yeah. So the thing
you and your heirs, any of the heirs, that was
yeah, last year was because of the Jobs Act. Last year was the last year that you could contribute 100% of your gross income. So we were able to contribute to the trust 100% of our gross income. The fun thing about that is once you've contributed it, you still the bank still looks at you like you made money. You just made a contribution to a charitable trust. Now you're in control of that trust, and you can use that as a checkbook type of a situation where you no longer are the owner of it, but you're the executor of it, so you can have it buy you that new Ferrari you've always wanted, right?
well, so you can take a distribution of 50,000 a year, and you and your heirs can take distributions off of it.
I believe you can. Well, I mean, you could have it pay you all kinds of money. You could have it pay you fees. You could have it loan you money. You could put $1 million in there and have it loan you $950,000
Okay,
as a loan.
not even take the distribution.
No.
That's a good idea.
So, you know, there's a lot of ways to play that, right? Those charitable trusts, I mean, they're pretty spectacular. So, but anyway, looks like Christy's back. Hi,
Yeah.
Christy.
Welcome back, Christy.
Hi guys, sorry about that. 4 dogs, Dad just got home, so it got really exciting.
Nice.
Yeah, so I'm Christy Bentley. I actually am Shannon Robnett's Investor Client Services Coordinator. So when you go to info@mve.com, I'm who's going to be answering you. So hi everybody, pleasure to meet you. I started investing in real estate with Shannon back in 2019 through one of his syndications. We had a small relationship prior to that. My former employer was an investor of his, and he kind of showed me the light into investing. And I had sold my primary residence. My husband and I got married. We purchased another one. We used it as a rental property for a little while, and then we decided to turn around and invest that money. My husband and I were actually able to see a 39% return on our first investment. So as you can understand, we were hooked like that. And I was looking for new employment, and I thought, you know, I'm going to get a hold of Shannon and pick his brain about real estate and investing and what I can kind of do. And he pretty much said, I'll do you better. I'll give you a job.
Yeah.
And about 2 days later, I was employed with Shannon.
So guys, what she said is she's really smart with investments, really bad at picking people to work with. I mean, that's what I heard.
Oh, no. It's been great. Learning everything new, something new every single day. It's the world of investing is, it's just mind blowing, the things that you don't know until you start looking into it, or you have someone such as Shannon to really teach you and show you the different ways that you can have your money make money, and you don't have to be a W-2 job forever, you know. Not that I don't enjoy my job and plan on staying for a really long time, Shannon.
Yeah, that was in the smart contract that we signed. We tokenized that, Christy.
Right?
Very nice. Cool. Thanks for joining us. And
Yeah.
definitely, if you haven't already joined our Facebook group, definitely jump in there. It'd be great to have you.
Okay.
That's awesome. Very cool. And let's see who else we got. Wes is the last one that has not introduced himself. If you're able to, and if you want to, Wes, you're feel free to jump on and give us a quick intro. And all right, yeah, if you're busy, that's no problem. So, but no, Shannon, this has been phenomenal. Some really good information, and we'll definitely stay in touch and keep abreast of what's going on. And look forward to this event coming up on the 18th, and follow along and see how it works out. And maybe if you talk to you about implementing this in one of our future deals as well.
Yeah, we'd love to just kind of sit down and help think through that process and see if it's the right thing to do, especially based on time horizons. And, it's funny what happens when you think about, maybe I don't have to sell this, how your underwriting can change, right?
Yeah,
it's really cool.
That is cool. Yeah,
Awesome.
Very nice. Cool.
Hey, enjoy the warm weather in Puerto Rico, because we get snow coming here in New Hampshire tonight.
Right. We got snow in Boise. Christy gives me the weather report. She asked me, she says, I always ask her first. I said, how's the weather up there? She tells me, she asked me how the weather is. And I said, do you really want me to tell you? I don't want to get you mad.
Can you hear the palm trees blowing?
Yeah.
Right.
Nice.
Earlier this week, I was stuck in my driveway with the snow, and he said, yeah, I had that same problem. Mhm.
Another friend of mine on Facebook was looking for a snowblower, and I asked him if it was a sand churner.
Nice. Yeah, I'm here in Austria. It's been snowing, getting some good skiing in over here. And then but my sister-in-law and her boyfriend just traveled down to Dominica last week. So they're sending us pictures every day of sitting out on the beach and under the palm trees. So that's pretty cool. So.
Yeah, definitely a change from Austria. So
yeah, for sure.
Well, thanks, guys. I appreciate you having me on. And you guys have my contact info. I'm going to put the link in there for our webinar onto your mastermind. And I appreciate the opportunity to tell you guys what we're doing. And hopefully we can look at working together in the future.
Sounds good. And then just to give you guys a heads up, so the next event will be in 2 weeks. That's going to be the 20th of January, same time. And our guest for that's going to be Kavita Barataki, who's she's a very successful syndicator based out of Austin, Texas. Had the pleasure of meeting her just a couple weeks ago before the holidays, and we were all at a really nice rooftop meet up there in Austin, and with a bunch of syndicators and investors around the area, just having a great evening. So she's got some great info to share, and look forward to seeing you guys there.
Awesome.
So we'll close out for tonight, and you guys have a great one.
We'll see you. Thanks.
Thanks, guys.